This conversation was sponsored by Komodo, a zero-knowledge peer-to-peer atomic swap exchange. Learn more at komodoplatform.com. Mike, how did you end up getting into crypto?
Well, in the 90s, I was with this think tank in California called the Extropy Institute. It was one of the organizations that basically people developed all the ideas of what we now call the technological singularity and the transhumanist movement and all that. And that's where I met Nick Szabo and Hal Finney and Ralph Merkel and Wei Dai and all these other guys on the Extropy Institute list. There was the transhumanist list, there was the cypherpunks list, there was Church of Virus, a number of email lists that everybody seemed to all be involved in, and we had a lot of great discussions then about, all kinds of issues about the internet as it was, how it could be, what are the problems that are particularly with digital currencies of the 1990s, and that's how things kind of led into developing the ideas that eventually became what we called BitGold and then evolved into Bitcoin.
Fantastic. You were also in the Air Force, right? How did you go from being in the Air Force to being a crypto economics engineer?
Well, I studied mechanical engineering at Worcester Polytech, and then I broke my back in a skiing accident and had to drop out. And when I recovered, I enlisted in the Air Force. And so I spent 3 years in the Air Force and then got out at the end of the Cold War with Bush's peace dividend right before the first Gulf War. And I became an entrepreneur in Seattle. And so I was doing a lot of tech innovation there, first in energy conservation and lighting technologies. And from there, I just kind of gravitated towards the transhumanist movement and joined the Extropy Institute from that and met all these other people from all over, but a lot from Silicon Valley, from elsewhere in the country and around the world. It was really interesting to meet all these people, to talk with them online about all these different kinds of issues and develop ideas for fixing problems in the early internet, for developing solutions and how things would evolve into the future.
All right. And then something happened before Bitcoin, but after you guys had discussed a lot of these sort of crypto economics ideas, or eGold was happening, and then you went to work in OpenSim or in Sim.
Yeah, so there was, in the 90s, there were digital currencies like DigiCash and eGold and so forth. And there was also an independent sound currency called that NORFED was putting out, silver dollars, from Bernard von Nothhaus's organization. And so people were trying all different ways of creating independent currencies. And they were falling into different traps. So like DigiCash fell into a fiat trap where they were over-issuing beyond what their depositors are putting in just to pay their bills, and so it devalued the value of their currency. eGold and some others wound up either getting their servers seized or their gold seized. The government would come in and say, well, we're going to hold on to this metal because someone may be using your system for money laundering or drug smuggling or whatever, the usual excuses we hear a lot from governments with regard to crypto. And so we realized that having metal sitting around was a point source security risk. So we were thinking about, how could you mathematically simulate the monetary behavior of sound money without actually having metal sitting around or in people's pockets. And so that was really the origin of ideas like proof of work, of making something that's a scarce digital good through a process of unforgeable costliness. So the idea is that gold and silver get their value from capital and labor invested in the past that appreciates into the future, into the present, and that's why it's deflationary macroeconomically, whereas fiat money is inflationary because it represents debt in the future that's paid off then and depreciates in value backward in time into the present, and that's what creates the inflationary pressure. So if we figured that if we had a computationally expensive process to generate coins, that it would simulate this behavior of gold and silver. And so then it was, at the time, a lot of us were using things like SETI at home to do these massive distributed data processing tricks, and there was Folding at Home and some other projects that were doing similar things. And we thought, if you had a massively distributed network of people doing computationally intensive work to prove the validity of these coins, then that would be something where it would be more expensive to fake it than to do it honestly, but still it would be expensive to do it honestly, so you have an intrinsic value to that scarce digital good. And that was really the basis for what came. And so all our ideas that were put together by Nick Szabo in his essays titled about BitGold. That was the working name that we had back then. And that the last time he essayed about that was in 2005. And shortly after that, I got into VR, and I was one of the top developers in Second Life.
When you say developers, you mean like it's like construction developers inside of SimCity or Second Life.
Not working for Linden Lab, which created Second Life per se, because most of the content in Second Life is created by the users. Mm-hmm. And so, I grew up to 53 simulated regions. I was subletting and renting out to thousands of customers, and we were, building all kinds of virtual content for them. I created the first virtual stock exchanges, and so we capitalized a whole lot of other people's businesses in the virtual economy. And we were doing anywhere between $250,000 to $500,000 USD in volume each year. And so it was, really a significant business. And we were involved in all sorts of areas of the virtual economy. And Linden Lab had started to restrict different economic activities. Like first they banned the virtual casinos, and all of the casino owners drained their funds out of the virtual banks and left Second Life, and that cratered the economy. And then because they drained the reserves of the bank. The banks had a banking crisis, and this was like a year before the real-life banking crisis. And so a lot of people think that the whole thing was engineered because Second Life had been financed by a firm called XL Partners, which people believe is a VC fund fronted by the CIA. Mm. And they thought that they were essentially experimenting on the SL economy to study how a banking collapse would impact the economy and so forth. And then they started banning people from advertising within the simulated environment. And we were always protesting against these sort of restrictions because SL is supposed to be really a free market economy and without regulations. And so they're using their game god powers to really change the terms of service without people's consent. And you could either, if you logged in and they changed the terms of service, if you didn't consent, they would nix your account, which is not really a valid way. It's called an adhesion contract, where you don't have a choice over it. And
it's kind of totalitarian, right?
And it's actually against standard contract law. But this is something where in California they actually have a loophole for online services where they can use adhesion contracts against people, and there's been a number of cases where people in other states have successfully fought against this, but it's still something that a lot of these companies utilize as part of their whole walled garden business model. And so by having sensors all along that, those are all addressable IP objects in the Internet of Things.
We humans, and we mortal humans in the Dash community are basically helping the gears that move it, that we can fall away and this thing will continue.
If you can't have a civil discussion, then there is no such thing as society or civilization.